Whatever income received by director comes under income from other source. Dividend from cooperative, as I told you, it is fully taxable. Remember, NSC, NPC always exempted. Income from lecture delivered nil because it is not other source. A warm welcome to one and all. This is your Adasa here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. And now we are in the session 4, Unit 2 of your Income Tax 2. Under Income Tax 2, we are discussing the topic called Income from Other Source. Now, what do you mean by income from other source? So, all theory concept you have learned in the first session itself, and later, your second and third session, we worked out 3 to 4 problems on income from other source. Most of the concept you already learned in that sessions, and in today's session, we go with 3 more problems on income from other source. Now, these are the 3 more problems which are very important for your examination purpose. The agenda is very simple. We will work out problems on your income from other source. So your problem number 5, we have done with 4 problems and now we are doing problem number 5. In this, following incomes are received by Mr. Ajay, a resident in the previous year. Whatever problems we are doing, it is not Hindu HUF or it is not other than individual. So all the problems we are doing, it is all about individuals. Now, compute his taxable income. Director fees. Director fees, there is no exemption, completely taxable under income from other source. Remember, director fees, for example, if you get salary of 10,000 per month, what you will do? You have to pay tax under income from salary. If directors get 10,000 per month, it is not income from salary. Why? Because he is not considered as employee. Hope you are clear. He is not considered as employee. That is the reason whatever income received by director comes under income from other source, not under salary. So, you are supposed to consider this as taxable. Then, interest from post office saving bank account. Now, what is the limit you have under interest from post office saving bank account? As you know that if you have watched the previous videos, you will tell the answers for this. What is the answer for this? Yes, good. Up to rupees 3,500 exempted. So whatever interest received from POSB, what is POSB? Post Office Saving Bank Account, up to 3,500, we consider it as exempted. Now, under this is taxable or exempted? Exempted. Then, dividend received from cooperative society. So already I spoke about dividend. Remember, if it is not written, write down. All the dividend from Indian company exempt. Again I will repeat, any dividend collected from Indian company, it is exempt. Now, so up to what limit? Yes, if it is Indian company, up to 10,000. Indian company up to, sorry, not 10,000, 10 lakh. Up to 10 lakh exempted if it is an Indian company. If it is a foreign company, fully taxable. If it is a cooperative society, fully taxable. Remember, this is cooperative society. So whatever dividend received is fully taxable. There is no exemption. Only for Indian company up to 10 lakh we consider as exemption. Then, winning from Andhra Pradesh State Lottery, 28,000. 28,000 they have given. If it is 28,000, so what is the limit? Up to 10,000, no tax. But here it is 28 and in the bracket they have mentioned net. What you are supposed to do? 28,000 multiplied with 100 whole divided by 70. This is a calculation you are supposed to do. Then Family pension received. Now, there is a new concept you are learning today. Now, in case of family pension, what is the calculation? Remember, in case of family pension, up to 15,000 are 1 by 3 of actual, whichever is less. Remember, in case of family pension, the calculation is very simple. You have to go like up to 15,000, up to 15,000 are 1/3 of actual, whichever is less, that is considered as exempted. Now, whatever we have 30,000, in that up to 15,000 are 1/3, whichever is less, we are supposed to minus. You know the concept, later we'll go for the answer. Dividend received on preference shares. Have they mentioned foreign company? No. So we have to assume that it is a Indian company. So Indian company up to what limit? 10 lakh. What is, how much here? 10,000. So it is exempted. Now, insurance commission received 23,500. Expenses incurred in earning insurance commission 2,500. Insurance commission up to 2.5, it is exempted. So now it is changed. I'll let you know what is the rate actually. Now, under this insurance commission, the tax percentage is 5%. What is the tax percentage? 5%. Now, 23,500, whatever income they have given, we have to convert to 100%. Whatever information is there, that is 95% because already 5% deducted. For example, you bought a lottery, the prize amount is around 24,000. Example, what is the prize amount? 24,000. Will they give you 24,000 directly? No. They will minus 5% commission. Later, they will give you balance. Similarly, whatever lottery is given, always remember 23,500 multiplied with 100 divided by 95. How come it is 95? The tax percentage is 5%. Commission is 5. So from 100, if you minus 5, it will become 95. Similarly, your lottery. What is the percentage tax? 30%. 100 minus 30, we take 70. Similarly, for lottery commission, we have to minus not 30, we have to minus 5. Now, after this, Ajay received a gold chain from his friend. Its fair market value is 32,000 and painting from another friend 18,000. 32 plus 18, how much? 50,000. What is the limit of gift collecting from your friend? Up to 50,000, no tax. Hope you are clear. Up to 50,000, you are not supposed to pay tax. So, as per this, there is no tax we are supposed to calculate. So, these are the informations we got. We'll see the answer. Whatever we discussed, it is already there in the answer. Now, so your solution must be like this. Computation of gross total income, GTI, gross total income. Gross total income. Now, assessee name, Mr. Ajay. What is the status? Status means it is not married or unmarried. In your income tax, status means resident or non-resident. Now, here it is resident, previous year and assessment year. These are the informations we have. Now, director fees, 10,000. Interest on post office. As I told you, director fees fully taxable. Post office saving bank account up to 3,500 exempt are tax free. Now I'll go back to your question. Post office saving bank account, how much you have? Only 500. What is the limit? Up to 3.5, no tax. Now, so it is 0. Dividend from cooperative, as I told you, it is fully taxable. There is no exemption for cooperative society. Then winning from lottery, as I told you, 28,000 into 100 divided by 70, it will become 40,000, because in the bracket they have mentioned that net. If the word net is there, you are supposed to calculate this. Next, dividend from preference shares, fully exempted. Why? Because Indian company. Next, family pension received. As I told you, what is the limit? 15,000 or 1/3, 1 by 3. 1 by 3 you can call it as 33.33. How? See, in your calculator, do 1 divided by 3. In your calculator, see 1 divided by 3. How much you will get? 33.33% you will get. Both are same only. Now, how much is your pension amount? I'll go back to question. Yes, your pension amount is 30,000. Now, this 30,000 multiplied with 1 by 3, how much you will get? 10,000. What is the maximum limit? 15. Whichever is less, the less is 10,000. Only 10,000 you are supposed to minus. Now what we are supposed to do? See, 30,000, 15,000 or 10,000. Whichever is less. 10,000 is less. 30 minus 10, your answer is 20,000. This is all about your family pension calculation. Now, I'll go to your answer. Yes, your family pension calculation. See, 30,000 minus 10,000, your answer is 20,000. Now, the next one, insurance commission, 23,500. As I told you, 95, 100 by 95, you will get 24,737. Minus, you have to subtract what? Whatever expenses made towards your insurance. So how much it is spent? 2.5 minus, you will get 22,237. Similarly, any gift collected tax-free. Why it is tax-free? Up to 50,000. It is already given actually. As per the agreement, fair market value of movable property received as gift is not more than rupees 50,000. It is fully tax-free. Hope you are clear. This is all about your problem number 5. Problem number 5, please take screenshot, then we'll go for problem number 6. So this is your problem number 5. Question. So solution part of problem 5. Continuation. So now we are into problem number 6. Under problem 6, Mr. Rahul Investment during the year 31st March 20 consisted the following. What are the informations like? 25% government security, then 20,000, 11% Delhi Corporation. Everything is taxable except NSC and all. Everything NSC, UTI, these are exempted. Now, 30,000, 12% Bombay Port Trust Bond, taxable. Then 5,000, 7 years Post Office National Savings Certificate. So NSC, National Saving Certificate, NSC, always exempted. Remember, always exempted. Then similarly, 10,000 for National Plan Certificate. So this is NPC. This is also exempted. Remember, NSC, NPC, always exempted. Along with this, if you get Unit Trust of India, UTI, this is also exempted. While doing your interest calculation, always remember, in case of NSC, NPC, as well as any gold scheme, yes, that one, and UTI, these are the things which are always exempted. Exempted in the sense, tax free. There is no tax on that. Now, so 1, 2, 3, 4, 5. We have total 5 adjustments. Another, we have 8% England bonds, 150 as a commission for collecting interest. At the end, you are supposed to minus. At the end, add everything. At the end, you are supposed to minus 150. Why? Because everywhere you have interest only. There is no other question like director fees, post office, lottery, horse race. Do you have anything? Nothing like that. So everything is related to interest. Then what we are supposed to do? Add everything. At the end, minus 150. Clear? If you have other information, then from the interest, you are supposed to minus. Or else, at the end, you can minus always. Now, SBI Saving Bank interest, 19,500. These are the informations you have. Compute his taxable income from other source. Remember, I have already told you the answer. What are the things we are supposed to do? All taxable, these two are exempted. Remember. And at the end, 150 we are supposed to minus. Now, so interest on securities. First one, government security. What we are supposed to do? 25,000 multiplied with 9%, 2,250. 25,000 into 9 by 100. Similarly, next one, 20,000 into 11%. Now, 20,000 multiplied with 11%, 2,200. Similarly, 30,000 into 12%. Post Office National Savings Certificate, as I told you, what it is? Taxable or tax-free? It is tax-free. See? Nil. We are not supposed to calculate anything. Similarly, your National Plan Certificate. National Plan Certificate also tax-free. If you can remember this section, it is 15. Section 10, subsection 15. If you can remember, you can. Or else, section is not required. They will not give you marks for section. They will give you marks only for numbers. Now, if you can remember National Savings Certificate, National Plan Certificate always comes under section 10, subsection 15. Now, how do we read this? Section 10, subsection 15. Now, 16,000, 8% Government of England. 16,000 multiplied with 8%, 1,200. Similarly, your SBI, last one, SBI is how much? 19,500. Add everything. After adding, you got 28,750 minus. What is minus? Minus. He paid 150 as a commission. That commission we are supposed to minus. So minus 150. Your answer is 28,600. Hope you are clear. Good. So these are the calculation. What did we learn from this? From this we learned NSE tax-free, NPC tax-free, UTI tax-free, debentures, interest on debenture, we will not pay tax. Last session I explained you. Interest on debenture, there is no tax. These 4 things you are supposed to remember. Along with this, in this we also learned your pension scheme. What is this concept of pension scheme? The concept is very simple. Under pension scheme, we go with like 1/3 or 33.3% or 15,000. Whichever is less, we are supposed to take that number minus from actual number given in the question. So this is all about pension scheme. Now, please take screenshot of problem number 6. So this is your problem number 6. Continuation of problem 6. Solution part of 6. Problem number 7. So we are in the last problem for the session now. Please try to work out on your own. Later I'll show you the answer also, but try to work out on your own. Now, in the problem number 7, we have director fees. Now, director fees, you know what is the, I don't say the answer. While doing, you have to do it on your own. So later we'll cross verify the answer. Now, director fees we have. I already explained you what to do with director fees. Yes. Interest on bank deposit. What we are supposed to do? Yes. Percentage not given. So same amount only we should consider. Income from undisclosed source like casual income. Any undisclosed source, irrespective of number, irrespective of amount, we are supposed to consider. Then winning from lottery net. Net if it is given, multiplied by 100 by 70. And royalty on book return. So royalty is always what? Taxable. But if there are any charges for that, we are supposed to minus. Income from lectures delivered. Remember, if you deliver the lecturer, it is not other source. It is your what? Profession. It is what? Your salary. It will not come under your income from other source. Remember this. So your income from lectures delivered is not your income from other source. It may come from salary or profession. Now, we will not consider this. Interest on loan given to relative. That is our extra income, other source. Interest on tax-free debenture. We'll come back there for that. Dividend from cooperative. Always taxable cooperative. Remember. Interest on post office up to 3,500. But we have only 500. Nil. 0. Interest on central government security. So these are the information we have. He paid 1,000 for typing the manuscript of book. Means, yeah, this one. Royalty of book return. 8,000 minus 1,000. You're supposed to take 7,000. That's it. Clear? We'll go to answer. Your answer is computation of taxable income from other source. Assessee Mr. Lingaraj. Status, it is resident. Previous year assessment year. These are the compulsory thing you are supposed to do. Now, director fees, fully taxable. Interest on bank deposit, fully taxable. Income from undisclosed, yes, fully taxable. Then winning from lottery. Winning from lottery, net they have given 28 into 100 divided by 70. It will become 40,000. Royalty from book, 8,000 minus 1,000, it is 7,000. Next, income from lecture delivered, nil, because it is not other source. Interest on loan given to relative, that is an extra income, so it is a other source. Interest on tax-free debenture, 3,600 into 100 by 90. So if it is a tax-free, we are supposed to consider 100 by 90. So it will be 4,000. Why it is 90? Why? Because 10%. Why? Because this is 10%. 100 minus 10, it will become 90. Dividend from cooperative society. So it is fully taxable. Interest on post office saving bank exempted because up to 3,500 no tax. Then interest on central government security taxable. Last one, your total taxable income from other source 93,200. Hope you are clear. Yes. So you can add once again. It may come 93 only. 13 and 25, 25, 65, 72, 79, 83, 91, 93, 200. It is proper. Clear? I'll go out of the screen. Please take screenshot. Yeah, this is your problem number 7. Your question. Solution part 1. Solution part 2. So this is all about your today's session. So we have done with 3 problems on income from other source. We may take another 1 or max to max 2 sessions to complete your topic. So another similar kind of problems are there, we'll work out, and we have theory concept in this. What is bond washing system, and few small topic like what is set off and carry forward. Those kind of topics are there, we'll complete in the next coming sessions. Thank you.